Hey everybody, hope you're well, and it's James here over the Part-Time Entrepreneur. And today I'm just going to go through some just key things that I've learned on this crazy journey of cryptocurrency. You know, I've done trading on other markets and bits and pieces, but it doesn't prepare you for the wild west of cryptocurrency. It's absolutely nuts. I absolutely love it. And I just want to share some key things because some of the stuff that I'll go through today might seem pretty obvious. And some stuff, you know, you might actually question yourself and go, actually, I probably need to do that more or whatever. However, as long as one point in this video gives you some value, then it's been completely worth doing. So we'll kick off, and I'm just going to go through just some key things that I just think are really, really important that help people, especially if you're new to cryptocurrency, because it can be, one, a little bit daunting, two, a little bit crazy, and you can sometimes get lost quite easily. So the first thing is, in traditional trading, you would very much, you know, look at technicals and technical analysis, you know, coupled with other things as well, sort of political, government sentiments, and all these types of things. But within the cryptocurrency world, you know, those things still do count, and it is good to obviously see what's happening. But things can just blow up, and people call it mooning and all this lot. But it's based on news. News is pretty much driving most things. You know, partnerships, releases of the actual product, because obviously there's a whole bunch of, you know, beta and alpha products out there. And some stuff are just still concepts as well. So news is the biggest thing. So my biggest resource for news is always Twitter. I find that I get most information from Twitter instantly. I have it all set up for all the top coins that I sort of either invested in, day trading in, or whatever it is, and try and keep ahead of the game. Now, if you really want to keep ahead of the game, the best thing to do is, when you look at the white papers, is start making a list. So make a list of all the times and then all the coins of where stuff will be happening. So, you know, the release of the alpha. So the thing is this, a lot of people will jump on board maybe a couple of days before, when the price is already pumping, or into the actual full-on mooning, going from a, you know, 10 cents to $1, whatever it is. You want to be in about 2 or 3 weeks before. That's the key. You're going to get in at like sillier prices, basically. There's one that I've just got into, Funfair. I've got in at the bottom, rock bottom price. I'm already up like 60-70%, and we haven't even got to the news yet. So when that starts pumping, when that gets going, all of a sudden that's going to be 3 or 4 pence. That's nearly 300% back. So be early, and obviously use these media sources that are out there. Then you've got dickheads, and you've got to watch out for these, because these guys are out for themselves. And what they're going to do, they're going to pump and dump the prices. Now obviously he did it on a massive scale, and there's others that are doing it in little groups and all different things. So you just be careful when you're going into trades. Try and be aware where you can. It's quite hard when you're not in some of these groups. So I would say get in as many groups as possible, and at least you get a flavour and a feel for what's happening in the marketplace, and also the sentiment, because sentiment is huge. Also avoid some of these groups like Palm Beach Confidential, £3,000. You know, the information's leaked 10 minutes after the interview anyway. You don't need to pay that. I know Imbelina charges like crazy money. You know, there's no need to pay for that. There's other stuff out there. I know there's a platform coming soon, which is going to be about, I don't know, anywhere between $10 and $20 or something, and it's going to have training videos. It's going to have tips. It's going to have everything, forums and loads of stuff. I know I've just heard that's coming. So there's other platforms out there, cheap as chips, and you don't have to pay some of this crazy money and newbies being taken advantage of, because that's never a good thing. The next thing is just don't be greedy. You know, profit is a profit. Now, if you're going to sit on a coin and you're not really bothered about the short-term price, then great. But if you're day trading, or, you know, trading over, you know, 1 or 2 days or more, like maybe 3 or 4, if something's really pumping, then make sure that you get out at the right point. And probably, where is the right point? Well, you want to probably sell out in stages as the price is going up, so you're always taking profit, and make sure you get your original investment back. Because the novice thing to do is, when the green candles start jumping, everybody starts jumping on board, and then all of a sudden you get the decline. It's normally about 70% or so, and people get caught upside down. A lot of people I coach generally have already been caught upside down, and then trying to find someone who can help them to turn them, make their money back, and then turn them back into profit again. So I see that a hell of a lot. So it's my number one rule, and it's so tempting when something's rocketing to jump on. I always step away, because 9 times out of 10 it doesn't come back. I mean, the only one that's really kept pumping is Bitcoin. All the others have gone up, come down, done different things. Like even NEO, everyone was like, NEO. It went up to $45. It came all the way back down at 20. There was obviously reasons for that, but you've just got to understand what goes up must come down. And there'll always be these dips and stuff. So just try and be as mindful and ask yourself the question, is it too late? If it's already rocketed, if it's already gone up by 50%, don't touch it. So the other thing is make sure you do your research. Don't be listening to, what I see out there is people that have been in, cryptocurrency for 2 months. They've done a few trades, they've made some money, and now they think they're Gordon bloody Gecko. And the truth is they don't know shit. They're in a bull market. It's easy to make money in a bull market. When I started trading 10 years ago, I traded in a bull market, and I thought I was the bee's knees. And I made 100 grand pretty quickly, and I also lost 100 grand pretty quickly because I didn't pay attention to the rules. I thought I knew it all. So make sure you do your research. Make sure that you do your due diligence, and create maybe a rating system. So when you're looking at coins, rate the team, rate the how easy stuff is to implement, because obviously that's a key one. Also, is there a mass market that will play into this? So you can create your own little scoring system, and then you create some consistency about all the coins that you're looking at. So that would be sort of my advice when you're looking at stuff. And when I do my YouTube videos, for pretty much every 8 to 10 ICO white papers I read, I review one. So I'm incredibly picky. I'm incredibly due diligent in terms of a lot of the research that I do. And if you look at the ICOs I have reviewed on my YouTube channel, you'll see that pretty much every single one has rocketed. Now, there's a lot that haven't. So being mindful and being picky about what you invest in and what you research and stuff will really make a huge difference to your portfolio. Then you're going to have to rely on your fundamentals. You're going to have to rely on your technical analysis skills. You're going to have to be more due diligent. However, if you've had this gambling type attitude to, like, I'll just throw it on, I'll see, I'll not check the prices, I'll not do no TA and all the rest of it, then you'll get into bad habits. And you don't want to get in bad habits, because when you get that, then you really are gambling. And I want to see everybody make money out of cryptocurrency and walk away. I'd rather see the hedge funds lose money and stuff. That'd be the ideal. And we'll walk away. We were in first. Happy days. And that's what I want. And this is why I do these videos, to help and educate people. The other thing is habits and gambling. And you're probably thinking, well, what are you talking about? And it's this. We're in a bull market, and a very big bull market. It's crazy. Some of the money I've made, we won't be long before I'm doing a video on how I made it. I turned £1 into 100k, and I can't wait to tell that story and do the video. And that's not far off. And then I'll be on to the next journey of £1 million. But it's based on fundamentals. It's learning the TA. It's learning, when to get in and when to get out of trades. So for me, it's about helping people get the fundamentals and basics in place now, because it's easy to gamble. And what I mean by that is that you see something go up, I just chuck some money in it, it's gone up, I'll come out. And if you get into those bad habits, then before you know it, you're upside down on investments where you were up before, And I want to see as many people do as well out of cryptocurrency as possible. Hence why I do all the educational videos and try and help people to understand things, and the ICO videos and break them down to make them, really understandable, even if you're brand new to cryptocurrency. So just be careful, really review what is your strategy when you're trading. What is it? Are you picking points? Are you just throwing money at it and hoping for the best? And just reassess how you're doing that. The other thing is that most people think that you need to beat the market. You've got to get in at the best price and beat the market. The only person that you generally need to beat is yourself. This is a game of psychology, and what I mean by that is this: in most cases, your whole body, your everything, your mind is in tune to certain things. And when a stock starts shooting up, we don't think, I've missed the boat. That's not our natural reaction. Your natural reaction is oh, I must buy now or I'm going to miss out forever. You don't even think rationally. We start to think emotionally. And when you start to think emotionally, you make all the wrong decisions. And you're probably like, now I'm saying this, you're thinking, oh yeah, I remember that time, oh yeah. And it's you make the wrong decisions when you start thinking emotionally. And it's when you start thinking rationally that you really start to make those wins. Now, some statistics for you. So first of all, we know that men are they think more rationally and women think more emotionally. So when you talk about trading, you would probably think that actually women are worse traders because they think more emotionally. Actually, in those situations, they actually think more rationally than men, and they actually make less trades and less often, and they're actually more profitable. I think it's by about 2% than blokes. So we're not doomed. We just need to control ourselves a little bit and just really sort of master your own psychology, and just realize when stuff's going up that it's time to step back, and when it's bumbling along the bottom, those are the times to start accumulating loads of shares. Because the thing is, if something's bumbling along at say 2 cents and you're just picking them up, you can get like maybe 100,000 shares. But if you're jumping in when it's gone to 6 or 8 cents or something like that, and it's mooning to maybe 10, you're not getting the value out of the trade at all. So, and that's how I make a lot of my money, is that I look for opportunities. I'll sit in something for 3 weeks if I have to, but I'll make 200-300% versus maybe a 20% trade. And then with that comes a lot of risk in terms of having to jump in and out of the trades. The other thing is have a growth mindset, and you're probably seeing Tony Robbins in the background. And actually, I follow this guy all around the world, and he's really set my mindset for success. When I think about all of the different things that I do, from everything from trading to my YouTube channel to loads of other businesses that I run. And you've got to constantly keep learning. You've constantly got to be on the pulse with cryptocurrency. It changes so quickly. I did a video. It was in August, and it was like top coins for 2018. I mean, it's so outdated already, and it's only November. It's bizarre. Like there's about 5 or 6 coins in there out of the 10 that are they're hardcore. They won't go away, and they're going to be great long-term growth coins. But there's other ones in there that sort of there was this big hype, and now they've just faded away. And that's mainly through the companies themselves, that they've just disappeared into the background. They've got their 30 million quid. They're happy now. See you later type thing. So keep that growth mindset all the time. Be hungry to learn and be eager to sort of get as much information as you possibly can. The other thing is make sure you have some goals. And the reason for this is to keep you on track. So if you're just mindlessly trading, again, you go back to this gambling thing. You've got nothing to keep you on track. How do you know that you're doing well? And it's probably, well, if I made a profit, I'm doing well. If I made a loss, blah blah blah, and all the rest of it. What you really want is, by month, what is your target? So if you started with 10 grand at the start of January, well, by the end of January you want to be at least 12 grand. Okay, cool. And then the next month you want to get to 14, and then 16, and then you can track your progress. And also, I don't know what most people's targets are. It might be to retire. It might be to just be able to travel the world and have enough money to do that and trade crypto, whatever it is. But set yourself some goals. And also, it'll keep you on track. It'll keep you focused on what you're doing as well. And also, it will make you review things. And that's the main part, because then if you review things, you look at your mistakes. What mistakes did you make? How can I fix it? And this is why it's important to have these goals. Get a book, write them down. There was a classic study in America. It was over 30 years, and there was a class, and they were given the task to basically think of a goal and write it down. Now, 80% of the class didn't even think of a goal. They couldn't be bothered. 15% thought of a goal, and 5% thought of the goal and wrote it down. 30 years on, the 5% that had thought about a goal and written it down, earned, I think it was something like 1.5 times more than the people that thought about a goal, and 6 times more, something like that, than those that hadn't. I don't know the exact numbers. I can't remember. I read this a long time ago. But it just gives you that context that writing stuff down puts you into action. And that's basically what this is all about. Getting you to take action, do the right things, create the right behaviors, and master your own inner self psychology. And then you can go and kill it on the markets. And then you can make loads of money. And then you can come back and write a comment if it helped you or not, or if you were able to make some changes. And then I'll feel great because I've helped you. And yeah, that'll make me feel good. So that's why I do it all, just to help people, really. I just want to say a massive thank you for everybody tuning in. And if you're finding these videos helpful and useful, please hit the like button. Please subscribe. And please leave any comments as well. You know, I'm always open to some feedback. And if there's other things that you want me to cover, then I definitely will. And you can follow me at JamesBull_UK, where I'll be putting some of my top picks when they occur, and I see the technical analysis. I'm going to whack them on there, and also at Steemit, JamesBull_UK too. So thanks very much for your time, guys. Appreciate you tuning in, and I will catch up with you on the next video.